Hi, my name is Michael Zhao from the Grayscale research team, and today we're going to be talking about crypto cycles. The crypto market has this fascinating history of moving in cycles, kind of like waves. Historically, these cycles have lasted about 4 years, with periods of big price gains followed by corrections. But here's the thing. As crypto matures, these patterns might not stick around forever. New developments like spot Bitcoin and Ether exchange-traded products, ETPs, and potential regulatory clarity in the US are changing the game. For disclosure purposes, outlook for the future is uncertain. Any further gains need to be supported by fundamentals, and investors need to take this into account before making decisions. Right now, we're in what looks to be an intermediate stage of the current cycle. Bitcoin's price has been on the rise since hitting a low in late 2022, and while it's up significantly, about 6 times its low, it hasn't reached the same explosive returns we've seen in earlier cycles. For example, earlier cycles saw Bitcoin multiply by 20x or even 100x. This time around, things are more measured, which might reflect how the market is maturing. Now let's talk about some indicators that help us understand where we are in this cycle. One popular measure is the MVRV ratio, and it compares Bitcoin's market value to its realized value, or what people actually paid for their coins. Historically, when this ratio hits a level of 4 or higher, it signals a market peak. Right now, it's sitting at 2.6. So that suggests that there could be still room for growth, though each cycle has seen this ratio peak at lower levels. So another key metric is how much Bitcoin is actively changing hands on-chain, and what some called HODL Waves, which is measured by the number of coins moved on-chain in the last year relative to the total free float supply of Bitcoin. So in previous cycles, at least 60% of the Bitcoin supply was transacted during bull markets. Today, we're not quite there yet, which again hints that this cycle might have more gas left in the tank. And it's not just Bitcoin. The broader crypto market is showing some interesting trends too. For instance, Bitcoin dominance, its share of total crypto market value, has started to decline after peaking earlier this cycle. This signals a shift where other cryptocurrencies or altcoins start to take center stage. We're seeing signs of speculative activity picking up in altcoins, things like high open interest in futures contracts, but not yet at levels that scream market top. So what does this all mean? Well, while past performance doesn't guarantee future results, the data suggests that we're not at the end of the bull cycle just yet. As long as fundamentals like adoption and broader economic conditions stay supportive, there's potential for this rally to continue into 2025 and beyond. So at the end of the day, crypto has come a long way since Bitcoin's early days. It's no longer just a niche asset class. With institutional products and clear regulations on the horizon, it's evolving into something more mainstream. But whether these cycles will continue as they have in the past, that's something only time will tell. For more on this topic, please visit grayscale.com/research. Thanks for listening.